When inflation rises, who steps in? When unemployment spikes, who reacts? When the economy crashes, who tries to fix it? The answer lies in two powerful tools every government uses: fiscal policy and monetary policy. Welcome back to the Learning Studio, where we turn economics into easy, animated stories. In this 11th episode of our Fundamentals and Core Concepts series, we'll explain what these two policies are, how they differ, and how they shape the economy you live in every day. Full economics playlist? It's just a click away in the video description below. Let's define them first. What is fiscal policy? Fiscal policy refers to how the government uses its spending and taxation to influence the economy. It's controlled by the Ministry of Finance or Parliament, not the central bank. In simple terms, if the government increases spending or cuts taxes, people have more money, demand rises, the economy gets a boost. Examples: building roads, schools or hospitals, tax rebates or income tax changes, subsidies and welfare programs. Fiscal policy is mostly used to fight unemployment or support economic growth. What is monetary policy? Monetary policy is how the central bank controls the money supply and interest rates to maintain stability. In India, that's the RBI. In the US, it's the Federal Reserve. If inflation is high, the central bank raises interest rates, loans become expensive, people spend less, inflation slows down. Tools of monetary policy: repo rate, interest rate on loans to banks, CRR and SLR, cash reserve ratios, open market operations, buying, selling government bonds. It mainly targets inflation control and currency stability. Famous quote: "Monetary policy is like pulling a string. Fiscal policy is like pushing it." Alan Blinder. Meaning, monetary policy can stop inflation fast, but fiscal policy is better for stimulating demand. Both are needed, like brakes and accelerator in a car. Why this topic matters. Understanding these policies helps you interpret news better, predict economic trends, understand government budgets, make smarter financial decisions. Whether you're a student, investor, or just a curious mind, knowing this gives you economic literacy that most people miss. What's next? Next up in our series, balance of payments and foreign reserves, how a country tracks its global transactions. So subscribe, tap the bell, and follow along with the full economics playlist below. This is the Learning Studio, where economics becomes animated, visual, and unforgettable.